Okay, hello everyone. So today's the 28th of January. As usual, guys, please take a look at the news, because not that we're dependent on the news. I don't really care about the news, but the hours give us a sign when we're checking the trade hours when our setups can be. So for example, we've got a 4:30 news coming up today, and if you check your hours, you've got a 3:30 there where the market is feeling, if you know how to read it. It's like a sexy kind of zone, isn't it? And then we've got 6:50, okay, in the evening, my time, 6:50. Then that's also going to be an interesting one, because after the news at 6, we're going to have some, dodgy moves into 6:50, 7 o'clock. All right, and if that continues, which I'm thinking it probably should continue, then we should have a target in that direction. So knowing the hours of the news allows you to plan better when the timing is close to there, or sometimes right on top of it as well. So let's take a look at gold. Now remember, with gold, we've got a swing day today. Okay, so the weekly, as you can see, the market is trending up, but this could turn into a double top. But I don't see gold, with all the problems in the world, I don't see gold like starting a downtrend. But obviously, because we're short-term traders, we're keeping a position maybe intraday or a few days max, or maybe just a week. If we caught a swing day going up, we can do that. But what we want to do is, the market is still going up. On the daily, you see the majority of the gaps are here, and there are no other gaps. It's pretty much closed up. Okay, so the ends are all meeting. There are buyers here. So a market coming back to kind of like close the gaps, dipping down a little bit and then going up, looks legitimate to me. Okay, so it's done all the targets here. If you sold yesterday, remember I said yesterday you can buy this and sell that. I said you could play both sides, or you could just wait and sell there, and so on. If you sold that, that's fine. Okay, and this is your trading hour now, and this is normal for the market to be shooting up right now. If you've learnt timing from me, you know who's Action Jackson, and he's doing it. So let's see what we can do with gold. Now with gold, if Tuesday is going to be a swing day, so we might find ourselves lower, okay, closing lower. We might find ourselves continuing the up move. Both cases, you need to match it. If you want to trade New York, it's looking a bit more clean, because until 1 p.m. here, we've got volatility. Okay, so London can be a bit volatile, which is fine. And so from 10 to 1, you need to be careful, okay, because 10 to 1 is going to be UK time zone, where the market's going to be in the morning session, and it's looking a bit volatile, okay, and that could take us to 3:30 New York, where now market can look for a change. Okay, so this will be could be like yesterday. All right, so we had like a beginning and then an end to it. So we had a beginning, and then in New York had an end to it, and in New York start to sell off again, because Asia sold off, London brought it up and started selling a little bit, and then New York just followed through. So that timing, as you can see, just worked out like magic, right in Asia's high and just selling off. So if you sold around here, which you should have done, because I said that's your zone, then you would have been just fine. Okay, so here it could be the same kind of setup, but remember, gold's got a trend going up, and it just filled in gaps on the daily, pretty much filled in. I'm not sure if they're going to take this little gap into account, but they could. In any case, though, if we come down into a trading hour, we want to be selling. We want to be buying up. If it goes up, okay, you have to be careful, because the swing day might make a high. All right, so the best bet to consider it as a swing day is either we're going to buy the lows, okay, and if it keeps pushing up, don't stand in front of it, The other option is, if it's going to be a swing day, it could really keep pushing lower. So it could go up into New York, and New York can continue to sell, okay, until we make a low, and then Wednesday will be a buy day. Okay, I hope that makes sense. If it doesn't, make a comment, write to me on the members area, and we can go over that stuff. So those are your swing hours here, as you can see. Okay, and that's how we're gonna kind of play it out. So you can wait for the volatility to be over, if you like, and just trade in the New York session. Let's take a look at the euro dollar. Now, yesterday I went short on the euro dollar. I had bought gold in the morning, okay, but I didn't sell it because I wanted to. This looked a bit more logical for me, and I'll tell you why it looked a bit more logical. Because Friday was a swing day, okay? So Friday was a swing day. Market coming back up to retest, clean out the stops as it did. And I nearly got stopped out here. It was a close shave. It really was a close shave, okay? But I was thinking like, okay, it's logical for them to clean out the stops. So this is why I said if it comes, back up, don't stand in front of it. So they sold off. That was okay, and then tapped up a little bit more and then just let it slide. It hit the first profit, it hit the second profit, and now we're out of the game. Now with the euro dollar, let's take a look. Remember from our technical analysis training, the first wave, okay, can be a 5 up, and then we're looking for a retracement for the beginning of the trend, right? So now this could be for us a really, really good setup on the pullback. So where should we come back to? Well, we should be coming back into this zone here. And if you measure your 37.5, that's what you should get into. So our first place where we'd want to be buying is obviously below the 50, but we want to see 37.5. Okay, so this is the zone we want to be seeing. Okay, so two things can happen here. We can have a boom, boom, boom down, or we can have a boom, boom, boom down, okay, and make a double bottom, or a double bottom with a divergence, slightly lower price with a divergence, and then push up. In both cases, though, as you know from the monthly, we are buyers. All right, so we do want to buy, okay, and that's how it is. So, on the pullbacks, buying is okay. And this is also, as you can see here, a trading hour right now in the market, kind of like pushing back up. We're probably going to go up here as well. So this is not a bad kind of place to get into the game. And if you're trading the euro dollar, you can also put your hours in there. So we've got 9:55. So let's call it 10. So it's going to be 9 here. Okay. So 9 on the platform. So if the market dips down, it's going to be a bit tricky. Okay, that's your 9 o'clock there. All right. And then we've got 10:30. Okay. So 10:30 is also going to be until 10:30, actually until 10:45. It's going to be a little hectic. So 10:45 here is going to be 9:45, isn't it? Yep, so there we are. So this time period is going to be a little tricky. Okay, so be mindful for that. And then we've got 11:45 to 12 o'clock my time. So sorry, 12:45 to 1 o'clock my time, which is going to be 11:45 here. From 11:45 to 12 o'clock, it's going to be a little volatile. And then we'll cross that bridge when we come to it, because that's also not a bad time to trade. Okay, so that's 12:55. It's going to be 11:55. So if I put it on the 11:45 there, the next bar will be like a trade bar as well. Okay, so basically you don't have to rush anything. Just take it easy and wait for the time and the price to kick in. So if we go back up again, just like with the gold setup yesterday, right? So think about the gold setup yesterday. Okay, Asia sold heavy, London takes it up to sell off. Okay, so just think of it the same kind of way, because that's what we're trying to do. Now with the euro dollar, we had Tuesday and Wednesday being a swing day, so pushing it further down. So if London goes up and then selling is okay, we come down into a Tuesday, Wednesday, okay? And this is an impulse wave, and it's looking like a runner, okay? So don't stand in front of it. It's going to be tricky if you do. Okay, and this was also the same kind of situation with gold yesterday. It was a bit of a tricky situation because the market's in a running mode. Now, sometimes you say, but if we're going just for timing and we're not really dependent on the, whatever the market is doing, we're just, working off time. So we don't care what the market does, right? It's true, but you're missing out on a critical point, which I taught in timing, and that's the clock. Okay, so keep an eye out on the clock. You see what I mean? And then the clock is going to help you out. And then sometimes you'll see, for example, here, this pushy yesterday was purely based on the clock. All right, nothing else. It was just based from the clock. So this is why you got to keep an eye on the clock to see what's going on, especially when the morning sessions are happening. All right, so if that helps, let's take a look at SP 500. Now with SP 500, as you know, we had Monday for a swing day. Okay, so Friday is okay, Monday is okay too. Remember, Friday was a swing day, and I'd said because Friday is a swing day, Monday following back down is okay. So following this down is okay. And the next swing day is going to be later on, as you know. So I don't mind following SP 500 down, okay, at all. Actually, it hasn't gone there, but I don't mind following this down. But how can we do that? Okay, now since this was a big push down, you can see the market comes up, Asia starts to stall. If we hit because there's a gap here which is like making me a bit uneasy, to be honest, all right, because they did no gap fill yesterday, just took it down big time. So two things can happen. Market can sell off, retest the lows. If it retests the lows, that becomes a swing day and the market can go up, okay? But it just looks to me with the weekly, like this is this is like they've sold off and it's kind of gone below the goodbye kiss and stuff. So it's a little tricky, okay? And there is divergence here, as you can see. All right, so the market was up, but the momentum isn't as high as the price. So I don't think anybody wants to be buying the tops either. So, coming down a little bit, I think, is in the cards. So if we, any retracement up is okay to sell if it's an hour. And this is also not a bad spot too. The market can just sell off from here, and it is a sell time. Okay, so this is like here. Okay, so so this is one zone. The other zone is it could go up here. There's a bit of a gap here, okay, and then kind of like close it off. But because we had with the SP 500, we had Monday, and coming from Friday, okay, so Friday was a swing day. So Monday selling was, we're all in agreement with that, and I did give targets and blah, blah, blah. Okay, so pushing this further down, I think is okay. On any pullback you want to sell here is good. If it sweeps there is good. This zone is good. This zone is also good. You see where the market dropped off there. Okay, so this zone is good. All right, so if the market lifts its head up a little bit and you want to sell off, is okay. And the reason they're selling off from here, as you can see, this is the last manipulation, okay, with a slight gap there, which it filled in here, okay. The last manipulation is that bar, which is your closing price, okay, and that's why they're selling off here, all right, where there's a sell reaction. Now this is a bit of a sandwich zone, okay, and if you're going to trade on a sandwich zone, you got to understand it's going to be a little bit more tricky, because they're going to be buyers and sellers, buyers and sellers, blah blah. It looks like it is because of the sandwich zone. We need to take note of that in any case, all right. And you know, if you're really interested, you can follow the clock to see how it's all panning out. But at the end of the day, on the daily, okay, I think, you know, any push up can be like sold further down, and I think we've got room to go down, to be honest, okay, on this one. So let's take a look at Dow Jones as well. Now with the Dow, remember last week also we had a Friday, okay, and then Friday and Monday, right? Now if you take a look at Dow Jones on the Monday, let's take a look. Big push up, okay, so that's your Friday and your Monday. Now this is looking like a better setup to sell, right? Because this is your Monday, okay, and look at that, that is spot on, okay, so I like that, okay, I like that. On the weekly, it's closed the gap, I like it. Friday was a swing day, Friday and Monday being a swing day, selling I think is okay to do so. 74 is 44,718. 44,718. They've just pretty much done it. Okay, so in New York it might just touch this or muck around. In London it might touch this and sell off. I think it's got room to come down and to sell off. Okay, that's my opinion anyway. All right, and that's it. Okay, so you know, any New York up move, stop sweeping, touching here, and then, you know, doing it is good. All right, and that's basically it. Let's take a look at NASDAQ. If you're going to sell, obviously, you know, that's your target, and then you can follow it down into this zone. With NASDAQ, if you take a look, it was a bit hectic last time I took a look at it. And I did say this is a bit dramatic. Okay, there you go. It's a bit dramatic. Okay. And I think we still have room to come down on this one. Okay. With NASDAQ, there you go. I said you could wait for, like, you know, a better setup as well, because, you know, on the one hand we want to short. Why? Because Friday was a swing day, right? Friday, and then on NASDAQ as well we got Monday, right? So it's same as the SP 500. So selling was the way to go. So if you sold, you know, you should have been okay. All right. And this is also, as you can see, New York selling off as well. Now we're in Asia, and this zone, as you can see, like I've marked in before. So you can sell here, you can sell at the weekly pivot, you can keep shorting it down, but just make sure you're in a time and price, you know, notion, because this is bearish. You see, it's just selling off, and then a big sell off. Buyers are in the game, okay, but this zone is gonna, you know, it's bound to break, because market's been here a little bit, you know, it's been pretty much dipped into a bit too much, you know, it's like triple, quadruple dipping into the same zone. So what we want to do is kind of like bring it down, okay. Also, as you can see, you know, Trump is in the office, and I think all the hype is now over, and now he's beginning to talk about all the tariffs and stuff and that kind of thing. It's not really good for the economy, because then you start, you know, blocking trade with all kinds of tariffs. So this is also probably a negative thing for the economy. Okay, although he's talking all big, we have to understand that the whole world is independent. Everybody is dependent on each other, so nobody's independent. But everybody's happy to play their cards. So this is to push down. So if we go back up, if we do sudden moves going back up, it might be to close the gap, to retest, and so on. Okay, so personally, it's a bit volatile for me. I don't like this because it's like on steroids all the time. It's all the time on steroids, it's like, it's tricky. Okay, so I don't like NASDAQ. But if you want to play around, don't muck around in the sandwich zone. If it breaks out, pulls back, you want to go there, do it with a smaller lot size. Often I see people taking too much risk on in places where they shouldn't. If you want to take a decent risk, which is according to your money management, obviously, you can go long where they went long before, right? So for example, if you drew your lines and said to yourself, you know what, I will go long at the long wick here. Okay, I will do that if it matches my hour. You can, because this is a place where they bought before. But you see, too many times being bought here is not good because everybody's dipping in and all the buyers are drying out. And when the sellers come in, there won't be any more buyers to buy and they'll just crack down. But if you wanted to do that, this is a place where you can take a regular risk. If you want to sell, this is a place where they sold once, twice, 3 waves down. So coming back up here, stop sweeping, filling in the gap, selling with your regular risk is okay. All right. But in the middle of nowhere, okay, this is not okay. So you're going to take smaller risk when you're in the middle of nowhere. All right. Let's take a look at Bitcoin. So personally, I think you can stay out of this. If you're a NASDAQ fan, then you can keep pushing down. If the market goes up, keep pushing down at those resistance levels and watch out for the gap at the top. Now this is Bitcoin. Remember with Bitcoin, okay, so Bitcoin this week, we don't have a swing day yet, when the swing days are, but last week it was here, wasn't it? Thursday, Friday. That's your Saturday, Sunday, Monday, and your Tuesday. So I did say from the highs you can sell, and I still think that's valid. If you're using your PST levels, your targeting should be spot on anyway. All right. But if you want to sell again, this zone is okay, and also this is okay. So you can match that 59 price. Okay, 59 is 105,344. So if it goes back up again and you want to sell, I think it's okay to do so. Okay, that's the first pivot here. The market's kind of closed slightly below it. Okay, and on the weekly, as you can see, this is going to be all choppy. All right, and this is right on a good buy kiss at 61, which I did say you need to be careful. All right, 97,551, and if you take a look at the low, okay, it's 97,641. Okay, so it's only $100 off, but $100 off, on Bitcoin is like not a lot. Okay, so it's just like, it's not that. Yeah, there you go. This is how much it is. Okay, if it matches your trade hours, obviously you can do so. If you're keen on waiting for the price, it's okay. If you wait for an impulse and then a pullback, that's also okay. That should also resonate with a trading hour in this zone. Okay, like yesterday, we had a trading hour. What in the evening did we have one? It would have been 10:30 here. 9:30. We had 10:30, so we had 9:30 here. So that would have been your U-turn here, and targeting 11:30, which is going to be 11:30 is going to be what, 10:30 here there. So okay, so this is your U-turn zone where the market's heading up. So selling from back up here again is okay, and that 105,300 could take out, just stop sweeping here and then pushing down again. All right, so be mindful. Obviously the tops we'd like to sell at rather than buy at. If you want to wait for the swing day, it's logical to do so.